Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 5th of February. Starting off with the FTSE, and here it looks like we're still in that mid-move consolidation between roughly 7,600 and 7,690. The RSI on the right side of neutral 50 at 54, so that gives us the impression that this is a mid-move consolidation ahead of a move up towards 7,800 and the top of that August rising trend channel. Support notionally between the 50 and 200-day moving averages, so maybe 75.60 to 75.80. If we have to go down there, ideally we stay on the right side of 7,600 ahead of a move to the upside. If you're cautious, obviously wait for a break of 76.90. Moving along to the DAX, and it's been about 17,000 being broken or not broken, and in this case, so far, we haven't broken it. We've tried 3 or 4 times in the recent past. Support there initially around 16,800. Otherwise, it's down to the floor of that rising trend channel from October, and the 50-day moving average at 16,600. That ties in with the red December trendline break. RSI at 59, so still a bit of gas in the tank for further attempts at 17,000 to be broken, and then a move up towards 17,800 or 900 by the end of this month. The Dow obviously has been the main driver of the markets in the recent past, and that may continue to be the case. We left the week on a high note, or a decent note, above 38,000, which is also the floor of that rising trend channel from October. And while we hold 38,000, we're looking for up to 40,000 as soon as the end of this month at that October resistance line projection. RSI at 69, just below the overbought level rather, but that may be irrelevant given the near vertical rise that we've had and the promise of a big number target there at 40,000. Markets tend to make a beeline for those big numbers, as we are seeing obviously with the DAX at the moment. Moving on to Bitcoin, and here it's been a battle around either side of the 50-day moving average around 43,000, which is actually quite a healthy thing to do given that we bounced off neutral RSI 50 a couple of times. This suggests that it's a sort of sideways shuffle ahead of a move to the upside and a retest of January resistance around 49,000. If we go below the recent support around 42,000, then there's a risk of 40,000 again, but that is also the floor of that rising August trend channel, so that there is reasonable support there. The worst case scenario at the moment is 38,000, the initial November resistance with the RSI on the right side of 50. That seems unlikely. For a momentum trader, then breaking 43,800 would be the easy way to go on an end-of-day close basis. Moving on to gold, which has been frustrating over the recent past, but still holding above the 50-day line and that broken December resistance line around the 2040 level. The longer we stay above that, the greater the chance of a move to 2100 in the first half of this month, and maybe up as high as 2180 by the end of this month. Below 2040 risks 2000, and then the worst case 1985, which is the floor of that rising March 2023 trend channel. Moving on to the stocks, and starting off with Artemis, which had an RNS today, which sounded quite exciting. Here we've got a bear trap island reversal, so gapping down twice back in January and gapping up today off the floor of that falling trend channel from September. That's around 3/4 of a penny. The longer we stay above that, the greater the chance of the initial target being towards a penny, and the 50 and 200-day moving averages there around that level, about 1.1 pence to be perfectly accurate, and hopefully we'll see that by the end of this month while we remain above 3/4 of a penny. We've championed Brave Bison here quite a few times, and the shares have delivered the goods after the unfilled gap to the upside that we had at the end of last month. That allowed us to break the 200-day line, currently at 2.25 pence, and then hit our first target, the top of that rising trend channel base from July at 2.6 pence. Above 2.6 pence, we're looking for a best case scenario target as high as 3.4 pence by the end of this month. So box ticked nicely there on that situation. Don't normally look at the bigger market cap companies, but with CMC difficult to resist, especially as there's an implication of people returning to the market to spread bet to their heart's delight. Here we had an unfilled gap to the upside through to the 200-day line, a sideways shuffle above it, and then a gap to the upside today above 138 and the top of the recent range, the January resistance. We're looking for up to £2.10 as soon as the end of next month. So a nice saucer-shaped recovery there for CMC, and hopefully that is a nice bullish indicator on the market. Moving on to Clontarf, which had an update today, and here rather messy near the lows, but we've broken that resistance line there from June. That was around 0.04, and we've broken the 50-day moving average around 0.05. Above that 50-day line, we're looking for up to 0.09, and the top of that broadening triangle from October. But I understand some people might find the whole thing rather fiddly, given all those 0.0 type numbers flying around. On to ExchangeXR, which is looking encouraging at the moment as well through the 200-day line, and heading for our target there at 3.8 pence, which hopefully will hit by the end of this month. I think it was a gap close buy signal that got us started on this, and the breakthrough the rising 50-day line that we had in the last week or so. So ExchangeXR looking reasonably healthy there. Also looking healthy, and I think there's a big mining giant interest here at E-Star Resources. Here another go at breaking the 200-day line at 1.9 pence. Above that, we're looking for up to 2.7 pence by the end of next month, or hopefully even sooner. It could be as soon as the end of this month, given the shuffle above a rising 50-day line that we've got going at the moment. Someone's emailed me or messaged me regarding the state of fusion antibodies, which they do on a regular basis, so I can't miss anything. Here we've got a rising trend channel base, the base there around 4.4 pence. Above that, we're looking for 8.5 pence or 8.6 pence as soon as the end of next month. We're helped by the recent rising 50-day moving average and the break of the RSI above neutral 50, which should get the shares on their way even after the pullback that we had back in the middle of last month, and probably the presence of one or two bedwetting desperados trying to sell into any strength there. But at least while we're above 4.4, looking for the shares to nearly double over coming weeks. On to HeliumOne, where you heard it here first. I think you heard it here on Friday and various other days as well. Here we've got the shares gapping up, filling that gap up to 2.9 pence, which we were looking for as a best case scenario. Current situation is that at least while we're above a recent resistance of 1.7 pence, let's call it 1.67 pence probably to be accurate, then we are looking for a retest of 2.9, above 2.9, or let's say 3 pence. On an end of day close basis, we could fill the gap up to the top of the November gap there at 5.6 pence, maybe by the end of next month, although I have to say at this stage that's a little bit optimistic, need the dust to settle. But it'll be interesting just in the first instance to have an end of day close back above that recent peak at 2.37. An end of day close above that today would be a nice look, above 2.9 an even nicer look, and then obviously then there's the door open to head to 5.6 pence. On the downside, don't want to see anything worse than the 50-day line currently at 1.1 pence. On to Jangada, which I think I covered yesterday, although I can't remember that far back. Here we've got a broadening triangle base. We've broken the 50-day line and that neckline resistance there at 1 3/4 pence. Above that, looking for 2.3 or 2.4 pence as soon as the end of this month, and break of RSI 50 also a healthy sign for the shares at the moment. Another RNS from Physiomics, and here just a chance of a bounce off this uptrend line there from August. That's around 1.5 pence. But the big prize here for the bulls is to break the 200-day line at 1 3/4 pence and then head up to 2.5 pence by the end of next month. Although, as you can see, in this stock, any sharp rallies have been sold into on the second or third day, so something to watch out for. We had the same effect back in January twice. Moving on to strategic minerals, which I've covered quite a few times. I think they're the person who does, actually. But here we had a bear trap gap reversal from below the old October support there, 0.12. Above 0.12, we had been looking for 0.25, which after today's break of January resistance looks all the more likely by the end of this month. So it looks like the job has been done there. S247 is next, and otherwise known as Smarttech. Here we've got the first inkling that it's a broadening triangle base, breaking the 50-day line at 22 pence. End of day close above that, we could be looking at 30 pence as soon as the end of this month. Going on to the last two. First one is T42, where we may have a rising trend channel base. We've had the 50-day moving average rising for the last, well, since the beginning of the year, and final bear trap reversal from below it. I think if you look closely, it's actually a bear trap gap reversal, a very strong candle today as well. Initial target here, obviously 4 pence on the 200-day line, but looking for up to 7 pence by the end of next month. Interesting stock to finish off with in the form of Tekcapital. Microsalt has done very well, and Tekcapital has a big share in that company. So we're hoping for the shares to bounce off the 200-day line at 10 pence. Initial target here, 14 pence, hopefully by the end of this month, and then maybe by the end of next month, Microsalt comes up with the goods as high as 21 pence. But the key here, staying on the right side of 10 pence and the 50-day line continuing to rise. That's it for me today. More updates tomorrow.